Okay, hey, welcome, guys. It is Monday night, July 14th, in preparation for Tuesday, July 15th, also known as my wife's birthday. All right, so let's before we get into the market analysis here for the night, let's continue on with the Market Wizards interview with top traders by Jack Swagger. He's in the process of interviewing Mark Weinstein. Um, just I wanted to repeat one thing he said there. Go over this section here again. Although the cheetah is the fastest animal in the world and can catch any animal on the plains, it will wait until it is absolutely sure that it can catch its prey. It may hide in the bush for a week, waiting for just the right moment. It will wait for a baby antelope, and not just any baby antelope, but preferably one that is also sick or lame. Only then, when there is no chance it can lose its prey, does it attack. To me, that is the epitome of professional trading. I love that. I need to print that off, frame it, read it, and then keep that in mind. So, all right. So down here, Swagger asks and says, "How do you pick your trades?" He said, I used many different types of technical inputs, charts, Elliott wave, Gann analysis, Fibonacci, aka Dustin numbers, cycles, sentiment, moving averages, and various oscillators. People think that technical analysis is unreliable because they tend to pick the one thing that they are comfortable with. The problem is that no single technical approach works all the time. You have to know when to use each method. I like that. That's there's a lot of truth there. Um, Swagger says, "Is there anything you can single out as the most important element in deciding to put on a trade?" He said, "I am always looking for a market that is losing momentum and then go the other way." Having traded both the stocks and commodities markets, would you say that they behave differently? Mark Weinstein says, absolutely. In contrast to the commodities market, the stock market very rarely gives you the opportunity to enjoy a meaningful trend. He said later down here, Swagger says, you win consistently in the stock market as well. What are you doing differently? He said, well, I don't try to figure out where the market is going before the action. I let the market tell me where it is going. Also, there is such a variety of technical inputs in the stock markets: divergences, advanced decline, sentiment, put call ratios, and so on. That you will almost always get a signal before the market is about to do something. Um, Swagger says, what are the trading rules that you live by? He said, always do your homework, number one. Number two, do not be arrogant. When you get arrogant, you forsake risk control. The best traders are the most humble. Number three, understand your limitations. Everyone has limitations, even the best traders. Number four, be your own person. Think against the herd as they must lose in time. Number five, do not trade until an opportunity presents itself. Knowing when to stay out of the market is as important as knowing when to be in them. Number six, your strategy has to be flexible enough to change when the environment changes. The mistake that most people make is they keep the same strategy all the time. They say, damn, the market didn't behave the way I thought it would. Why should it? Life and the markets just don't work that way. Number seven, do not get too complacent once you have made profits. The toughest thing in the world is holding on to profits. That is because once you have attained a goal, you then set a second goal that is usually the same as the first one, to make more money. Consequently, for many people, attainment of that second goal is not as rewarding. They may begin to question what they really want from trading and trigger a self-destructive process in which they wind up losing. Swagger asks, do you have any final advice? Uh, uh, any final advice you have for the beginning trader? Said, yes, you have to learn how to lose. It is more important than learning how to win. If you think you're always going to be a winner, when you lose, you will develop feelings of hostility and end up blaming the market instead of trying to learn why you lost. Limit losses quickly. To paraphrase from Reminiscence of a Stock Operator, most traders hold on to their losses too long because they hope the loss will not get larger. They take their profits too soon because they fear the profits will diminish. Instead, traders should fear a larger loss and hope for larger profits. Weinstein's most traumatic trading experience occurred when he let a material goal interfere with his trading. This is a common theme that has surfaced in other interviews. It invariably seems to be a mistake to translate the potential profits or losses of a trade into material terms. The cornerstone of Weinstein's trading approach is to wait for those trades in which everything appears to be lined up exactly right, and the odds of winning seem overwhelming. Even though most of us can never expect to remotely approach Weinstein's confidence in the trades that he selects, the concept of waiting for only those trades that one feels the most confident about is sound advice that is echoed by a number of traders in this book. Although viewing markets as non-random over the long run, I have long believed that the very short-term market fluctuations, for example, the intraday price movements, were largely random. But Weinstein has shaken this belief in me. All right, that's the end of that section and the end of that chapter. Next, we do part 4, the view from the floor. We start with the interview with Brian Gelber, broker turned trader, which we will get into tomorrow night. Okay, wanted to jump into, don't have a whole lot to go over here on the daily candles. I just kind of put these horizontal lines here. The 63, 23, 50, and the 62, 63 and a quarter. I just kind of marked the close here, this upper close here. We have not closed above this or below here. So I just kind of marked that we're in this box range. We've had a little spikes up above, we've had some spikes down below, but no close above or below that yet. So, keep in mind, we do have, quite a bit of room for some, push down, some room for some push up. But as of yet, we have not closed, above or below that area. Also wanted to jump over to the 65,000 tick chart. So I marked those same horizontal, the 63, 23, 50 and the 62, 63 and a quarter, just to show you what that looks like on the 65,000 tick charts here. Sorry, let me, boom. Okay. So we've hit that, my measured move. That does not mean obviously that we can't continue on. I just have that as a minimum measured move out of that. So far, we are continuing to hold up above this price overlap here. And then I've kind of marked off, some of these spike highs here, these spike highs here, and then some lower spikes here. In the overnight Globex session, we moved up, quarter pointed through on the price action here from the other day. New all-time highs by a quarter point after we already went through this here. So that high was 33 and a quarter. Then we went up to 35.50 and then 35.75. So that still could lead to further upside movement on those. I wanted to pull back over the daily just to remind us. On the daily chart, we are still in the same LBR pattern. On both the ES and the SPY, neither one is really showing breaking down. Matter of fact, kind of trending up on that. So we want to be cautious that of that and be aware of that, and just be aware of that. Okay, so that was the 65,000 tick chart. Let me pull over the 60-minute chart here. So this is interesting here. So we kind of made this little A, B, C, D, E move down, one poke lower, then started this move up. Well, this white line here, this is the mid Keltner channel. So that's the LBR Keltner channel, mid Keltner channel there. So that's the 20 period moving average. And I noticed here that Today we came here and we basically bounced off that 20 period. That was around, oh, I guess it's 2200. Um, so we moved up during the US session. The Asia session opened up. We moved back down here, did this, pretty intense spike up off that 20 period moving average. So what I'm going to be looking at is that going to hold? See if we have continued support tomorrow over top of that 20 period moving average, or if we fail that 20 period moving average. If we fail that, start coming down below it, because we do have a little bit of this, this new all-time high here is showing, potential little bit of divergences here in the LBR. So we want to be cognizant of that. Also, I did want to bring in this 2 period rate of change. We've had actually these last 2 days. Let me zoom in on that. Sorry. So on these last two up days, is this today? Yeah, I'm sorry, that's tomorrow's price action. So the 14th and the 11th, 14th on the daily basis. So the 11th we kind of leveled out here. 11th and 14th we kind of leveled out. So far, because we had a down flip down on the 2 period rate of change, leveling out, and now we're moving back up in that 2 period rate of change. So it'd be interesting to see if we get a flip over in that 2 period rate of change, or if we get continued upside movement. I did want to remind us here on the SPY. So this is just kind of hey, be cautious getting too bearish. I pointed out that we did take out the high of that 3 bar, which usually leads to further upside. We did have a Keltner channel reversal play here. However, the 5 period SMA buy played out as well. So again, as I pointed out, we have that daily look here on the LBR 310, still looking positive. We are holding above this prior all-time high. We broke out, to the upside of that. Once we broke out to the upside of that, basically we've held that. So we broke above it. We did a little bit of jiggles here, but there's still nothing indicating that we're going to slam back down here. That we could move sideways until we hit this 20 period moving average. So now we're here at the 614.19 as of right now. Over the next couple days, this could continue to move up here. Also, keep in mind, we are in July environment, which, we were joking about the ATR today. Welcome to July trading, July and August trading. So keep that in mind, guys. Let's do some safe trades. Let's be the cheetah, stock our trades, the best trades that we can find, and then have the conviction to stick with those. All right, that's it for tonight. We will follow up tomorrow. Thanks.